Hi everyone, this is Michael Kramer of Mock Capital. Today is Tuesday, April 12th, and it's around 4:15 New York time. So the rest of this week will be fairly busy. Wednesday, August 13th will be a quiet day, but then Thursday, August 14th, we'll see initial jobless claims, PPI, and then on Friday, August 15th, we'll be getting retail sales. So, these data points, when we put them all together, will give us a pretty good, handle on the shape of the U.S. economy. CPI report on August 12th came in a little bit weaker on the headline year-over-year number, but hotter on the core number year-over-year. And so that's creating a little bit of confusion, I think, in the marketplaces in terms of what it means for the path of rate cuts. But also, when we get the PPI data on Thursday the 14th, it will give us a much better handle in terms of the Fed's preferred metric, which is PCE, and that should give us a good idea of where that's likely to be. And then, of course, the retail sales numbers are very important because it will give us a handle on where the consumer is and how the spending is going in the overall economy following what was a really weak job report for the month of July. When we look at the euro's been consolidating the last couple of days right below resistance at 117, and we're basically just also above the 10-day and 20-day exponential moving averages. I mean, for the most part, when we look at the euro, we've seen that the RSI and momentum has really been weakening more recently, although today it looks like it may have broken out above the downtrend that had formed in the RSI. So if that's the case and momentum is really shifting, then we're potentially going to see the euro really begin to strengthen again versus the dollar and potentially move back up towards this 118 area. If this turns out to just be a fake out, then I think we're probably looking at a euro heading back towards the lower end of the trading range, perhaps around 114 or so. When we look at the pound has really been strengthening, and it's kind of reversed as we were kind of speculating last week. We're trading above the 10-day exponential moving average and the 20-day simple moving average. And it would look like, based on this chart, that the next major level of resistance would come somewhere around 135.70. You can also see that the pound has broken the downtrend that had formed on the RSI, and now we're starting to tick higher. So at this point, it looks like the momentum also has shifted for the pound, and we could be looking at higher prices. When we look at the yen, we've fallen below the uptrend that had formed, and we're basically sitting right on the moving averages. But again, you can see how we clearly came up to this trend line, and that's where we failed. And now it looks like maybe we could be heading lower, which would suggest the yen is going to continue to strengthen. So suddenly it's starting to look like perhaps the dollar's path of least resistance may be lower. And you can kind of see that even when you look at the dollar index sitting below the exponential moving average. And even when you look at the trend line on the RSI, you can see that that's also broken more recently. When we look at gold obviously now is still looking fairly weak. We had some news that it looked like maybe gold was going to really break out to the upside, but it hasn't been able to do that. We're back below the moving averages. You can see that big down candle we had on Monday the 11th. So again, it looks to me like gold is probably putting in some sort of significant topping pattern here, and we could be looking at gold returning to this 32.70 region. When we look at oil's been trying to form some sort of bottom again. Here we are sitting at around 66. Oil's been really difficult to predict. It's really just been more range bound. RSI clearly trending lower, suggesting that oil could continue to decline. It looks to me like maybe we're looking at oil finding support somewhere around 64.5. I mean, resistance at 70 seems like it could be pretty firm if we start trading back up there, but oil really has just been chopping sideways back and forth in some pretty big ranges over the last couple of months, and we're not really seeing any evidence of that changing yet. There's certainly no trending happening. When we look at the DAX, we're not really seeing very much happening there either. 10-day exponential moving average, we're just sitting below resistance at 24,240. RSI clearly trending lower. So We're really waiting to see if the DAX can take out this high at 24,640. That's the big level to look for on the upside. Meanwhile, if we continue to see this downward trend, so we're looking at potentially a return to 23,390. The FTSE also has been trending sideways really since the middle of July. We're not really getting any clear signs yet either from this. We really need to see the FTSE confirm any sort of breakout, although it is starting to look like you have the makings of what could be a bull flag forming, and so there could be a good opportunity here for the FTSE to break out to the upside and potentially move higher from where we are currently. There you could see the flag. The NASDAQ today moved higher following that CPI report by about 1.3%. So it's extended its highs and it's moved back up. Here you can see we're trading above the upper Bollinger Band. RSI right now suggests that there could still be a little bit further to go. I think that the resistance level right now sits at around somewhere around 24,025 or so for the NASDAQ, while we really need to see the NASDAQ break below the support level of the 10-day exponential moving average, which is something that we just really haven't been able to see it do, and that would suggest that would be the support level. For the S&P, it finally overtook this high on from July 31st, and right now we're looking at also a similar situation where we're just above the Bollinger Band, and we still see that the RSI is rising. Also, it's the same setup right now really for the S&P. This 10-day exponential moving average is going to continue to serve as support until we see this really get broken. And we look at the Dow, you can see that this is up to resistance around 44,460. If we're able to break above this tomorrow and continue to move up, then I would look for resistance somewhere around 44,700 or so. RSI is really not giving us much of any confirmation at this point in any trend. I hope you find this helpful. Have a great week.